Well, 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 folks. Maybe we are not going in full-blown recession after all. Maybe all the bears have been wrong this whole frickin' time and things are just gonna be going happy, daisy, fucking everything straight back up. Um, I just want to deep dive into what is going on in the market right now. Where are we heading? I know I talk about this every day, but this has been a very interesting past couple weeks. We are on the either we're at the bottom of the cliff or we're at the edge of the cliff. This is kind of just how it's been all year. And I want to just jump into why I'm seeing a lot of bulls getting really bullish right now, and I'm seeing a lot of bears getting a little scared right now because I think the inflation equation is a little bit trickier than everyone thinks. I think there's a lot more to it that meets the eye. So first things first, it all has to do with oil. Not all of it, a lot of it doesn't, but I mean, oil is the major weight in inflation. Uh, and you can tell where oil starts to rise is where inflation starts to rise. You can see inflation started rising. It peaked up here over in June of 2021. And then back in June of 2021, it peaked. You can look at oil back in June of 2021. What's it do? Oh, it peaks and then it flattens down a little bit. And that was a kind of incredible thing we saw last summer. We saw inflation. We saw this curve. It was going straight up, but then it flattened out a little bit, and people were like, hey, maybe inflation's not that bad. And then what happened? We got Delta, we got Omicron, and we got the war in Ukraine. These three major catalysts, I guess, to spike the demand of everything, spike the stimmies that the government was printing off. So, being that those three things that are temporary in nature have kind of passed now, and now we're at the back end of these catalysts, we could start to see inflation coming down. And well, we definitely will. I think CPI numbers next month will probably be like 8.2-ish%. Um, because oil is clearly, I mean, oil is peaked heavily and now it's starting to crumble. It's really just a question of if oil continues to drop or not. But so we will see that inflation come down. We will see bulls jumping up and down. We're gonna see shit going straight up. Everyone's gonna be losing their minds. But I'm not so much just seeing if it's peaked or not. I want to see where does the curve go. Do we just keep going down or do we stabilize? So obviously 8% is terrible, and we've only been at 8% for about 3 months now. March, April, June, May, and June. So July will be the fifth month of 8% inflation. So the question is really, where does the curve flatten? If it flattens at 8%, that's still terrible. If oil starts to come down and inflation is only coming down to like 7% and the curve flattens there, still terrible. If it flattens at 6%, still really bad because I know now 6% sounds great because Jesus Christ, we're over here at 9. But 6% is still not good at all because, I mean, do I have to explain that to you, anyone, why 6% inflation year over year is terrible? Everything you own loses 6% of its value. So that is really the question on a lot of people's minds, and that's what bears are saying. They're like, well, inflation's going to come down, but where will it actually come down? Will it really come down to 2% like the Fed is trying to get to? Will it just peak at like 9, come down to 7, 7.5, and just bounce up and down around there for the next year? If that happens, that's terrible, and the Fed will just continue to keep grinding on the rates. And so now that I've gotten oil out of the way, everything else that is not including oil, all items less food and energy, that has peaked. So that's good. That's up at 6.5, 5.9%. It came down a little last month. Otherwise, electricity, no sign of electricity coming down. It's still at 13.7%. Obviously, that's connected to energy. But just energy costs in general, natural gas still up in 38.4%. So these are still things, living costs. These are costs of living right here. Shelter has not come down. That's not connected to oil really that much. I mean, a little bit when it comes to building new ones. Services still peaking. So we know that a lot of this has to do with oil, but then there's still just a lot of things that really are not that much connected to oil, like just housing, shelter, education. Education is really not going up that much, but electricity, energy, all that shit, all the things that people pay bills on every month. Food also, but food is heavily connected to oil because of transportation. But um, there's just more to CPI than just oil. Obviously, oil helps a lot. That helps the Fed. The Fed, it's doing the Fed's job for them when oil comes down. Um, but this just makes me look back to March of this year, where what was the big fear at the time? Obviously, inflation. But then people were like, "Hey, inflation was caused by this Ukraine war, and it looks like we priced in the Ukraine war. Therefore, I think inflation will come down." And what did the market do off of that? Oh my God! Let's go actually just buy SPX. Wow, did the market give us the biggest bull trap I've ever seen in my life, and probably will ever see. Just straight up, and everyone was like, "Gee whiz, that's nice. Looks like everything's priced in. We priced in inflation and the Ukraine war." Wait a second. I forgot the Fed. The Fed is still the most aggressive Fed ever. They're still sitting on $4 trillion worth of shit that they have to offload on us, which I'll get back to that in just a second. But then we just dumped, and we dump, and you can see where we dump. We get FOMC dump, inflation number dump, wait for FOMC slash inflation number dump, FOMC, then next dump, and then that's where we bottomed at 3600 on SPX. So what I'm kind of getting at is this just a big trap, and you gotta love the timing of all the. I mean, I view a lot of other YouTubers and just go on Twitter a lot, and people start saying this shit always when the market's coming up. It's never when the market's going straight down where people are like, hey, maybe things aren't as bad as we think. It's always when you get these crazy, which, I mean, the market hasn't even really come up that much. It's kind of consolidating and coming up. So this is better than the March rise where we just went straight up with zero consolidation. So this is a stronger, and that's what you want to see. That's why I said last March when we were just going straight up, I was super worried because it's like, this is not supposed to happen. We're not supposed to go straight up. We're supposed to consolidate, grind our way up. Otherwise, it just gets yanked back down. So this has been better than that. We've had consolidation, bouncing, consolidate, and now we get a breakout. But it is just odd timing how everyone always gets super bullish and starts going like, gee, I think inflation's priced in. Um, when this kind of thing happens, when the market starts to rise. And of course, the market starts to rise because earnings haven't been as bad, I guess, as people think, even though they've still been terrible. I mean, if you ask Snapchat, so Snapchat, terrible earnings, down 40%. And what did that do to the rest of the market? Google dropped 6% off of that. Meta dropped about 7.5%. Just all the advertising names got destroyed on that. So that is a little concerning, but it could just be a temporary dump. You got semis that are ripping off of the bills, the bills, the chips bill. So that's why when I hate when people start to say, hey, we've priced things in, but then you zoom out and you're like, wait a second, why is the market going up? Oh, a huge chunk of the market, semiconductors, is going up because Congress is going to write them a $40 billion check. Oh, what else is going up? What was I even getting at? Oh, then just otherwise that things are going up because the price of oil is coming down, which is of course bullish, I guess, in the short term, but bearish in the long term because that usually happens into a recession. But otherwise, it is just interesting how these things always happen like that. I mean, semis have just been going straight up. Like semis are doing what the S&P did back in March, and it's kind of scaring me. Like it is kind of just gone straight up. I mean, we went from like 200 on the SMH up to 232. That's like a 15% or no, yeah, yeah, about 15% rip up. Um, but yeah. Anyways, uh, besides all the oil, besides inflation, we still have to talk about the like huge fucking elephant in the room, which is the fact that the Fed is still sitting on here. I got this nice little chart. It's still sitting on about $9 trillion worth of stuff that they said they would start to sell off by now. And they have started to sell it off, but this is how little they've sold off. You can see right here. This is June where they're supposed to start selling off. We're at 8.93 trillion. We come down to 8.89 trillion, and yeah. So That's another thing people aren't really talking about. Oh, wait a second. The Fed is still gonna have to sell $4 trillion worth of stuff onto the market. Whoa. And you can look back at SPX to see the last time the Fed did this back in 2018. Go back 10 years. Little time machine. So here we are back in 2018. Back in 2018, July, they start talking. They have been buying all this shit still. So this is 10 years after the Great Recession. They're still holding on to all the things. They went from 900 billion before the Great Recession to 4 trillion, and then they announced, "Hey, we're going to sell off 1 trillion of that. That's a quarter of that. We're going to start selling that off." And what does the market do? It collapsed. It comes down about 20 some percent. We go into a full-on bear market on the I'm not even on SPX. Here we go. Yeah, that's it. The market just it dumps off that. We come from 2,900 all the way to the 2,300. A huge dump off of just the fact that the Fed was going to start slightly raising rates and they were going to start slightly selling off all the crap that they had been buying uh, for ever since the 2008 recession. So you have to ask yourself, well, and everything else was good back then. I mean, 2018, the market was fine. Like, look at 2018. I mean, there was a little chart at the start of the year. We had a little bit of a sell-off from 28 down to like 25. You know, it was a rough start of the year. It was a rough patch. But then come summertime, we're just getting rallying. The market's strong. And then what happens? Oh no, Janet Yellen comes out and she's like, "Hey guys, we're holding on to all this shit from 2008. I think the market's fine. They were still at 0% interest rates back here." So she's like, "Hey, I'm going to start selling some of this stuff." What happens? Market dumps 20% just off of that. Just purely off of that. That they were going to dump off 1 trillion out of the 4 trillion that they'd been buying over the past 10 years, if I'm not mistaken. Let me see here. Yeah. Oh yeah. Look at that. They're right at 900 billion. And then this entire time they're just buying. I mean, from 2000 from 2008 here at 900 billion, they double that through 2008 to 2.2 trillion. Then just steadily they just stimulate constantly from 2008 until about over here at 2018, and you could see where Yellen was like, "Hey, we're gonna start selling stuff off," and we steadily start coming down. Look at the steepness of that curve. It's barely going down. It's just like, we're selling a little bit. And we're selling. But then you look at what SPX did. It tanked. It did not just have a little tiny. What the fuck is going on? God, my shit is bugged. We didn't just have a little dip off of that. It went straight down. I mean, we got a nice little dump here back in 2018. Just from October until December. Um, and then I mean, the market did price that in. So we priced that in at that point, and you could see it 2018, and then yeah, we just keep selling. But then uh, fast forward up here to 2019, and they're like, ah, shit, maybe went a little too fast. So they buy a little bit more, and then here we go. Uh, oh shoot, here we go, here it is, and then COVID. So they were up to 4 trillion at that point. So they got up to 4 trillion by that point. By the peak over here, they were at 4.5 trillion. So they went from 4.5 down to they didn't even get a trillion off of their balance sheet. That's how little that they sold off, and that's how drastically the market reacted to that news. Um, so it did price it in, and then it just went straight up. So fun recovery there. Is that the same thing that's happening here? Well, I would kind of beg to differ because look at how little we've come down. The assets have hardly moved. They've hardly even started selling them. They're not even like selling them as hard as they said they would. They're so scared of what it's going to do to the market that they've barely even started selling any of this shit. Um, and it's not just like they're trying to get 1 trillion. So back here, they were just trying to get a trillion off those books. Uh, because they've just been stimulating the economy for so long, and they were just holding on to all this shit. This is 0% interest rates the entire time. And then finally, when they're like, "Hey, we're gonna raise them up to like 2%," the market just shits itself and goes straight down. And that was when there was none of the other macroeconomic issues that there are today. None of the supply chain issues, not the war in Ukraine, none of that shit. This was peacetime. This was good time back in 2018. And and now look at what we're at. Now we're way up here. They got like $8 trillion worth of shit that they're trying to sell. 9 trillion, and they're trying to dump off half of that. So think about if the market dumped when times were good, and they said they wanted to sell $1 trillion worth of their crap. Uh, what's it gonna do when times are bad macroeconomic wise, and they're trying to sell a $4 trillion? And that is just part of the equation that no one is talking about. Like that because they literally propped up the stock market. I mean, this is why stocks went up. You could see where did they start buying? Oh, March 25th of 2020. This is so simple. This is it right here. I give this for free. And where's the market start coming up? Oh, whoa, look at that. Holy shit, look at that. They said on the 24th, "Hey, we're going to start buying bonds. We're going to start pumping trillions into the market." And what happened? It goes from 2200 to 2450 in one day. That's an insane jump. And purely because they were just pumping the market could not go down. They were pumping so much money into it. And it's not like everyone woke up and was like, "Hey, COVID's not that bad." The smart people were buying because they knew how this shit works. They know the Fed runs everything. So they were loading up. They heard the Fed and they were like, "Oh shit, green light." And they bought, and that's why the market went straight up because they knew that it couldn't go down with the Fed just propping it up. So that is why I'm a little bit skeptical of all these people that are jumping up and down right now that the recession is priced in. That's the first time I've ever heard of that, by the way. Oh, we priced in a recession. That's a new one. I've heard of pricing in a war, pricing in inflation, but pricing in a recession. That's interesting. That's very, very interesting. That's like your house. Hey, my house is priced in the fire. It's priced in the house. It's not gonna go down. It's not gonna crumble because the house is used to the fire now. The fire is it's just in the living room right now. It's gotten used to it. It's strange to me that people say the recession is priced in. It just does not make any sense when you think about like actually think about that. The recession has been priced in. What does that even mean? Anyways, I'm just a little skeptical, but I am looking to the upside. I'm always looking to the upside. So I'm looking to perhaps something that I want to do because I'm not risk on right now. I'm pretty risk off. I just have most of my money in Nvidia, otherwise cash, most in cash, some in Nvidia, I should say. I'm looking at companies that are like a steal right now that are pretty cheap in my opinion. And I'm looking at maybe just grabbing some hedge longs. And I say hedge long because if we do just go vertically straight up from here, I don't want to sit back and miss all the action. So I'm looking at maybe buying like AMD call, like shit, one over here at 140 for like $300, putting like just 5% of the portfolio, maybe like $1,500 worth into these very long out calls, like a long, like we're talking a year out. Like if inflation really does go away within a year and everything's hunky dory by a year, and the Fed pauses or reverses their quantitative tightening, things are just going to go straight up. So I'm looking at buying some of these very, very long out calls that have a theta of like $2. So it costs me $2 a day to hold these. Because I do not want to sit back and just be too cautious and miss it. Also with Micron, I think Micron is so stupidly cheap right now. It is disgusting. I mean, you could grab a $90 Micron call or $95 for about $400, and that's about 2 years out. That might be a little too far out. Here we go, 90. Here we go, like an $80 one for $400. That's about a year out. Um, I think that would just be a good idea because I do think the rise is gonna be crazy when it happens. I don't think it's gonna be like a light switch the second the Fed comes out and says, "Hey, we're done with rates." I don't think it's just gonna go straight from there. I think it's just gonna be a slow realization that maybe things aren't as bad as they are. But I am still holding on to I mean, it's just I don't know, man. I'm still holding on to this thought of this is how recessions usually go. Is that we usually have a year of uncertainty with 2007. 2007, we dump into 2007. Here we are, start of the year. We dump, we chop around, we get a nice little rally. Things are a little worrisome. Oh shit, we dump, and then oh no, this is 2008. I'm looking at 2008, and then here we go. We get our summer rally. Look at this. Look at this. This is July right here. Start of July, we start to rally. We get like a from about 1200 up to about 1300. So a solid rally on the SPX before an huge. Just this is the Colossus. This was the big crash everyone remembers right here. Um, so I am just worried about that, and it is bizarre. I mean, what are the odds of that? That this lines up perfectly with this year. That we get a rally through March, and then we get a rally through July, and then come September we get the huge monster crash, and then later into next year. It's just I don't know, man. It gives me a really really bad taste in my mouth when those two things. I mean, it could just be a coincidence. Call me crazy, but I think it's just because, like I said, earnings haven't been as bad as people thought. They were still bad, but just because they weren't as bad as people thought, that's enough to make markets rally. But I think come fall, we have to really consider, hey, maybe the interest rate hikes just haven't hit these businesses yet. The Fed funds rate is going up like crazy. And we know, like I've said, it usually takes 6 to 12 months for the Fed funds rate to actually affect the economy. And it's still very low. We're still only at, where the fuck? Give me a damn graph chart. We're still only at 1.21%. So we've hardly even gone up that much. We're talking. They're going to do another 75 basis point hike this week on Wednesday. Should be 75. If it's 100, I think that could be a little rug pullish. So we'll be up to like 2%, and you got to think 2%. That's nothing. They got it up to 2.4 back in 2019 before they realized, oh shit, we're going a little too fast, and then they dropped it back down. So they usually try to get the Fed funds rate even with inflation. And if you take everything out of inflation, like all the energy and shit, inflation's really at like 6%, I guess. That's what they say. I don't believe that. But assuming that inflation doesn't just cure itself and it just withstands, it just flattens at 7%, then that means the Fed is going to have to keep jacking up rates forever, like for a very long time through all of next year. And can the consumer handle that? Can the stock market handle that? Can they handle the $4 trillion that they're still trying to dump on the market? I don't know. And it's a liquidity thing. I mean, there's just so much liquidity out in the country right now, just in the economy in general. They just pump so much liquidity that just and it's like a duh. No wonder we have inflation. So it's just so many like question marks. I just don't know what to believe. But I do think that the news about the consumer is nice. The fact that inflation has probably peaked is good, and that the market will short-term rally off of this, probably through August. I wouldn't be shocked if we rip through August. We see SPX 4,300, 4,200-ish. We see some crazy, and then come fall time, come September, we get the Fed. We see CPI is, oh shit, it's flattened at like 8.5 or 7.5%. And we see, oh shit, earnings aren't that great. Oh no. And then the Fed comes out and they are like, all right, we see that inflation has kind of flattened at like 8%, so we're gonna have to do like 100 basis point, and then I think that could be a potential rug pull, because that is very very aggressive, and you only have to look back as far as back here in the 80s, and can't get this to go back that far, but back in the 80s they basically had to do that, and it just rug pulled the whole market, and that's the power of the Fed. They can do that. I don't think they want to do that, but what are you gonna do? I mean, you have no choice if this shit just doesn't go down. So inflation's the name of the game. And look at that. In 1980, they just kept tightening, tightening, tightening. Market goes down, and oh no, where's it go up? Great, it go up. Oh, in 1981, they're like, hey, we can start dropping rates. In 82, they're like, hey, all right, I think we're good. We'll drop rates. June 1982. Let's look at it. Oh, whoa, look at that. We're right near the bottom. Look at that. The recession in 1980, and then oh shit, and then by August they're really dropping it. Oh, let's look at August on the chart. What? That's the dude. That's the bottom of the recession right there. Look at that, dude. That's crazy. How does that work, bro? That's the bottom, right where they said, "Hey, we're done tightening rates. We're gonna drop them. We're gonna cut them in like half over the next year," and the market just goes straight back up. It just makes back all the losses from those prior 2 years. Just over the just over like 2 months, it makes back all of those losses from about 2 years. Just insanity. So, just a little history lesson. And we just gotta keep strong. Don't let. I mean, they give us. You cannot let the short-term price action make you think that things are different than they are. But then you can't also just be completely consumed by the bearish sentiment. And I feel like I'm on the fence. I'm just very on the fence. I got completely roasted in March, and the same kind of sentiment was out there that I'm seeing now, where Bitcoin was going up, crypto was going up in general, the whole stock market was ripping, and people were just like, hey, maybe it's not as bad as we thought, maybe we overreacted. And what happened next? So um, I'm looking at just buying some very far out of the money leap calls, like a year out. That way, if we do go straight up, I'll make some hard coin off of that, and I won't be sitting here with my FOMO face. Um, Anyways, yeah, that's about it. Sorry if I was a little disorganized. There's just it's just so much moving parts. I know it's very dry, but it is just it's very important to know all these things because otherwise you just get sucked into the short-term price action. And this is just how bear rally there. This is just how bear rallies work. I mean, we just go straight up, and then it's so much mental mass psychology amongst the masses where people they start to just get hopeful. They're like, wow, look at this. There's so much hope. And what do you think they want you to believe that things are gonna go straight up? So you keep buying shit? Of course, duh. They want your liquidity in the market. Um, Fix is right here at 20, dude. Oh man, this next week. So Wednesday we got FOMC meeting, which is obviously it's everything. It's just everything. It's everything. There's nothing. There's no analysis I can do on my chart to give you an idea of what is going to happen when there is FOMC coming up because that is literally everything. So um, after that, what do we got? Do we have Yahoo Finance? You failed me again. So Tuesday we got Alphabet, Google. We have oh my God, Tuesday is huge. So we got Microsoft and Google and Visa on Tuesday. Yeah, Microsoft, Google, and Visa on Tuesday. So huge. Uh, Huge earnings. Wednesday, we got Meta also on FOMC day, so that's huge for also Google and advertising and tech in general. Qualcomm also on Wednesday, that's a monster. So Amazon on Thursday, another huge one. Apple on Thursday, like this week is dude, it's gonna be so crazy. It's gonna just be nuts. This week is just gonna be it's gonna be so crazy. Mart's either gonna go straight up or watch it just go sideways. Like I'm so excited. I don't know what to do. Anyways, guys, this is a half-hour video. I'm making a goddamn movie over here. That's the end of my ramblings. Just have to get my thoughts out there. I feel like I'm just going crazy when I see everyone going like, "Don't fall for the rally." Oh, actually, inflation's not that bad. Look. So I just gotta talk about it. But anyways, guys, I'll catch y'all later.